Most small business owners fall into one of two categories. They either avoid credit cards completely or they use them way too much, racking up a huge amount of debt. Both can cost you big. In this video, I'll show you how to use business credit cards the right way so you can build credit, manage cash flow, and even earn some credit card rewards without falling into debt. Whether you're just starting out or trying to clean up your finances, this is what I wish every small business owner knew about credit cards. I'm Sean. I've been a CPA for 14 years, and this is What is Accounting and How Do I Do It? I'm going to run you through an example in Excel just to demonstrate the impact of properly using a credit card versus not using a credit card at all. Now, if you're overusing a credit card, the interest can rack up pretty quickly. So we can look at that too. But for now, I'm just going to focus on not using versus using. So I got a blank spreadsheet here. Say you have a monthly fixed spend for your business, just costs that could go on a credit card of $15,000. I'm just making these numbers up just to demonstrate what this would look like. So let's just say month one, we're going to do a full year. So whatever, we're getting two more here. Okay. So now let's just say you pay cash. You don't want to use credit cards. You're afraid of racking up debt. So you're just paying everything in cash. So we're just gonna copy that over there. All right, cool. So now your annual cash spend is $180,000. Okay. Now let's go to credit cards. Okay, what do you think month one is? 15,000? No. It's actually zero. Most credit cards have like a weird cutoff. It might be like mid-month or something like that. But for purposes here, let's just assume a statement date that follows the month. So if you start spending on January 1st, and your statement period is going to be 1 month, so you go all the way to January 31st. Usually your credit card bill will be due like 2 weeks later, something like that. So in month one, if you spend $15,000 and you put it all on a credit card, you're not going to have to pay that until midway through month two. Same with month two. You put another $15,000 on, you're not going to have to pay it till month three. So let's say you spend 15 grand a month still, and you have the cash, you're not overspending, you're only spending money on your credit card that you can afford to pay. So in other words, you could pay with cash, but you choose to pay with a credit card. So now you just got $15,000 back. And now you're probably wondering, well, what about interest, Sean? Well, guess what? You don't pay interest if you pay back the full balance of each statement. So, in other words, if you owed $15,000 at the end of January and you pay that when the bill comes, when the payment is due, you do not pay any interest at all. So, by the time you get to if you get to let's say your payment is in the middle of February and you have even payments throughout the month. By the time you get to February 15th, you're going to have, 15 grand plus half of February. So you're going to have $22,500. Your total credit card amount due, credit card debt, but it's not real debt because there's no interest accruing on it yet. So if you pay the last month's statement balance of $15,000, you don't get charged interest. That would leave $7,500 on your bill for mid-month February, and then you'd continue spending through February, and eventually by the end of February, you'd be again back at $15,000. Again, no interest spent. You only pay interest when you go past due. So if you pay the minimum payment amount so that you don't incur a late fee. Then they start charging you interest each day. So that it's an annual rate, but they charge you each day based on whatever your balance is. They may charge you on a monthly basis, but usually it's each day. It's depending on whatever your credit card agreement says. But for this example, we're not focused on interest because we are avoiding interest. We don't want that. There's no reason for that. And there's cheaper ways if you need cash. If you need to make payments and you don't have enough cash, there's much cheaper ways to do this than with a credit card. You get a bank loan for a way lower interest rate. So anyway, we are paying this off. The statement balance every month. We incur no interest. You just increased your cash by $15,000. Now, we're not done. You get credit card rewards. Now, usually it's when you pay the bill that those rewards actually get added to your account. So that's, for simplicity here, that's what we're going to do. Most credit cards these days, it varies, but most of them give you 2% cash back. Now, it might not seem like much, but this adds up. So let's say you get 2% cash back on all those purchases. So it's $300 a month. And then what I would recommend is don't, take that and be like, oh, I'm going to buy stuff for myself. Use it as a statement credit, which you almost can always do. Some of these credit cards give you like airline miles or something like that. I would look for one that gives you cash back. Then you can apply that against your statement balance, and the credit card company just paid you $300 for using your credit card. So now your net payment with a credit card per month, so again, month one is $0. Every month after that is $14,700. So now your annual payment when you paid in cash was $180. With a credit card, assuming 2% cash back on your card applied to the statement balance every month, is only $161,700. That is a difference. I think $18,300. Yeah, there we go. That means that at the end of the year, by going with a credit card and paying in this way, your cash balance in your bank is going to be $18,300 higher than if you just paid in cash. So this is huge. This is a huge key to business is managing your cash flow, because then you have more flexibility. It's easier to get bank financing. You don't miss bills from vendors. And when you miss bills, you rack up late fees. So by increasing your cash balance here, you have way more flexibility. And if you look at this $18,000, that is enough to cover 1 month of your spending. So if you had a rough month in one of those months, then you have $18,300 to play with to ensure that you don't go past due. You have that extra cash to help yourself out and not accrue more interest on your credit card. So that's what I wanted to talk through today. I hope that was helpful to you. Again, I'm Sean, and I started Ledger Ready just to provide small business owners with advice like this to help you succeed and learn a little bit more about finance and accounting. If you're interested in learning more, go to ledgerready.work. I have an email newsletter. I do not spam you. I'm not trying to sell you anything. Just occasional tips and tricks for accounting and finance. I also have a free budget tool that when you sign up, you will get an email from me and a link to download that tool. It's completely free. I just developed that to help small business owners to put a budget together that makes sense for them for a year, an annual budget, so to speak. And, hopefully that helps you out. So, again, I'm Sean, and this is What is Accounting and How Do I Do It? See you next time.